Hello and welcome everyone to another episode of Kuvera Insights, where we speak with industry leaders to find out more about how you should manage your personal wealth. Today we have two very special guests with us. First is Navneet. He is the Chief Investment Officer of SBI Fund Management, a role he has held since 2008. Navneet manages over 100 billion US dollars across various asset classes in mutual funds and also in segregated accounts. He has 25 years in financial markets, has had very senior roles prior to SBI with Morgan Stanley Investment Management and also with Aditya Birla Sun Life Mutual Fund. He's a pioneer of ESG investing in India and the chairman of Indian Association of Investment Professionals. Welcome, Navneet. Pleasure to have you here.
My pleasure. Thank you.
We also have with us Bijoy, who is a financial journalist by profession and a theater enthusiast by passion. And Smallcap do have a lot of drama. That's the topic for this conversation, by the way. So it fits nicely in. He's the assistant editor at Cogencis, and in the past has worked with brands such as Network 18, Financial Times, and CRISIL. He runs a fortnightly column called Big Bank Theory and has won the prestigious City Journalism Excellence Award and Shriram Journalism Award. Bijoy is the founder of Loudmouth Entertainment, for which he writes and directs plays that have been performed at various theatre festivals. He also teaches students at Xavier's, Casey College, IIJNM Bangalore, and BSc. Just a quick aside, Bijoy, how do you find the time?
I find it much more difficult now with the 4-year-old at home. So I think I've started trying to, segregate some of these things out into different parts of the year now, because with a 4-year-old at home, he needs a lot of my time.
Oh,
I want to spend time with him. Yeah.
I know. I have a 6-year-old and a 2-year-old, so I totally understand. We will be talking today about small cap funds, and to start things off, let me just very quickly, what are small cap stocks, how they have performed historically, and if you can just give some context around small cap returns versus mid cap and large cap returns, and then that starts the gets the ball rolling for this conversation.
So as per SEBI classification, the top 100 stocks are, in terms of market capitalization, are the large caps. The next 150 stocks are classified as mid caps. Everything else is a small cap. And as you know, India is a market with thousands of stocks listed on the stock exchanges. The small cap universe is pretty large. But you think from an institutional investor's perspective, I think the next 300 or 400 stocks which can be looked at for institutional by institutional investors like us, they would classify as the small cap. Over a long period of time, one would assume that a smaller company has the potential to grow at a higher rate and deliver higher returns. Historically, there have been long periods where small cap index has outperformed the large cap index, while over the last few years, particularly since 2018, we have seen a significant outperformance of the large cap index. We are seeing a market which has got extremely polarized, where a certain number of large cap stocks have outperformed very, very substantially, and small cap indices have not done well. While our sense is that with some of the disruptions we are seeing around the world and in the economy here, also accentuated by the current crisis that we are going through, there's a potential that small cap index as such may deliver good returns.
Fair enough. So we know that 2018 January was the peak of the small cap index. Since then, I think small cap, at least the index, is down roughly 30%, while large cap indices are down about 15 to 16% from their peak, which was achieved early this year. So there's definitely been that divergence in returns. So Bijoy, how do you
globally, by the way, it's not only in India, even globally, if you compare the top stocks in US versus the Russell 2000, or you look at most of the other markets, there has been a similar trend over the last few years.
Which is very fair. I mean, we do see that the top 5 stocks. We wrote about this recently. The top 5 stocks in the US are now close to 17% of the market capitalization. In India, it's even worse. The top 5 stocks are now 49% of BSE Sensex 30. It's no longer a diversified index as it is supposed to be. And even Nifty 50, they are about 41% of Nifty 50. So to Navneet's point, there has been a lot of evidence that there is polarization building up. Now, let's get down to kind of what happened post January 2018, Bijoy, if you want to give it a shot. That was the turning point, right? Like January 2018, till that point, we had this roaring rally in small caps.
Yeah.
And then suddenly they fall out of favor what was the catalyst according to in your mind?
So it's just pinning it down to one factor alone may not be easy. But there was this general trend at that point of time also, because I'm later going to bring up pledge shares. There was this general trend at that point of time where there was over leveraged across many of these companies, and the balance sheets of many of these companies were extremely stretched. The promoters of these companies had gone and got into other businesses. So what happened is there was a general risk aversion that started setting in about small cap funds as a sector. There were specific sector issues within the group, but there were bigger issues about the fact that people said, I don't know what's actually underneath the small cap company, the small cap group of companies. I think that kind of set the stage for a lot of these companies to fall out of favor. Beginning, I'm sure Navneet can add more market centric view on this, but for a lot of people who look at these companies, who look at these balance sheets, what led to people questioning the numbers itself was the fact that you just didn't trust whatever the data was that was coming out of these companies, and there wasn't enough data. You realize that promoters had taken money, but that had not been disclosed. There was a lot of group entities that had been borrowing, and there were a lot of just too many transactions that just did not come to the surface until until there were forensics done and until other issues came up. Even now, for example, like I was mentioning earlier,
I was going to cut in and say, have things improved in the recent past?
I think some things that are better off. I was just having a conversation with Rajneesh Kumar sir over the weekend, and he said that SBI actually is now being able to drill down a lot more into GST data, into those kind of data that are actually digitized. So you are able to look at trades data, receivables data. So that's a lot better than it was maybe in 2017, maybe in 2018. So there is GST, there is receivables that are available. So these are helpful. Is it completely clear from the company perspective? I would say no, because even now, for example, let's just take the name of a Yes Bank. When you find out that the promoter has gone and created an entity and issued debt, and suddenly when there is a deleveraging issue that happens, the entity itself has a problem. And this is 2 levels away from where we started. So sorry for the digression.
They're not even a small cap stock. So
yeah, they're not even a small cap stock. Exactly.
With a Yes Bank, then think about,
So like I was saying, so in March, when I was looking at, so Cogencis has this corporate fundamental database. I was looking at the data, and there are 182 small cap companies that have pledged shares, where promoters have gone ahead and pledged shares, and the sizable amounts. The mid cap group is only 25, 26 companies that have gone and done the same thing. When you look at it from that perspective, you realize that maybe the promoters are stretched. Maybe they have over leveraged. Their fortunes are very linked to where their stock prices are going to be, and that is always going to be a concern. I'm sure Navneet can come in here when they look at balance sheets, whether how important this is increasingly for looking at it. So sorry to start to digress from 2018 story, but I think the fundamental issues with the small cap companies stays the same. I was talking to a friend who's a small cap fund manager, and he said the small cap fund manager earns his fee. Everybody thinks it's easy to invest in a small cap company. It is extremely difficult to look at multiple companies and come up with numbers that make sense, that give you the comfort to invest in those companies. So, big answer to a small question, but I think that generally sets the tone for why investors should be careful when they look at small cap funds, and why there is merit in looking at them, but they need to be able to look at the numbers much more closely before they do. Sorry.
So what Bijoy talked about. So if you talk about the December 17, Jan 18, then look at some of the classical signs of a rally getting overextended. So a lot of these companies which are part of NCLT proceedings, when you know that banks are going to take a haircut and the stocks are going up every day.
Right.
You have a lot of these IPOs where some of the institutional investors were finding the valuations on the higher side, but the IPO get oversubscribed, and then the listing happens at another 30-40% higher. So we have an in-house sentiment index. I mean, we look at a lot of indicators to measure the sentiment of investors. And we look at one of the Google trends of how many people are doing a Google search on the stocks, I mean, the multi-bagger stock, how to look for the best performing stocks, so on and so forth. And that index is zoomed during that period, end 17, early 18. In fact, interestingly, over the last few weeks, we are seeing that index is almost at the same level where it was in Jan 18. So there clearly seems to be a lot of retail interest coming back into the small caps.
I mean, this kind of reminds me of how Hertz stock kept rallying even though they had filed for bankruptcy, because you had a new army of Robinhood investors who just think that this kind of investing is easy. So, what are the pitfalls of this kind of small cap investing, right? I mean, is it kind of and in some sense, if our investors can get some ideas, what kind of hard work goes behind creating a view in the small cap space and then executing on it? Because Bijoy has also mentioned it. Data is hard to get, data is hard to verify, and more importantly, you don't know what transactions are related party and which ones are not. So there is a lot of conflict going on, and you have very little idea of what's being packaged. Is that good for you or is that bad for you? So at an institutional level, I mean, how do you guys handle these challenges?
So first of all, the investing philosophy remains the same. The fundamental tenets of investing don't change when you are investing in a large cap versus a small cap or a mid cap. I mean, you are looking at business, you are looking at management, you are looking at valuations. I mean, they remain exactly the same. Now, small caps, because they are under-researched, and also a lot of investors don't participate because of the liquidity issues, there could be a set of opportunity because they are under-researched. If you put in more research resources, as Bijoy talked about, if you can look at, the forensic framework, that can help you a lot because market is ignoring it. And also, in terms of the various channel checks, trying to put the dots, trying to connect various dots and seeing an opportunity in a company which is under research can give you a very good alpha opportunity. And that's very critical. Because you asked about the institutional investors' perspective, one of the important aspects in small cap is the liquidity. So when we buy a stock in our small cap fund, my colleague and friend Asst, who runs the fund, has done a phenomenal job over the last several years. We are very particular about the capacity of that fund. So we stopped the subscription at 750 crore, much ahead of that, the big small cap rally in 17 or the early part of the 2018. We've just opened it, but again, for a specific amount of 1,000 crores. Because when you're getting into a small cap, you should buy with a mindset, if you are an institutional investor, that if there is a wrong news, or if there is a negative news pertaining to the company, or if your investment thesis goes wrong, you won't be able to get out of the stock easily. And I think that's very, very critical. That makes the job, I would say, easier or tougher. As Bijoy said, it's a lot tougher because you have to work a lot harder. They have lesser amount of history and they have lesser amount of maybe the data and the information available, less number of analysts covering that stock, so on and so forth.
I can just ask Navneet something. You said that you've opened your fund again for flows. You are still a well-performing small cap fund, but I know other funds that have also tried to get in flows and they're struggling. Is it that people now are realizing that you have to play the economy a lot better when you look at small caps? There are people who think that small caps are a bull market play and not something that you get into when there is so much stress. Do you see that? There's another group that says that it's time to go looking at the bottom. So is it a bottom searching kind of stock, kind of opportunity, or the other way? Sorry, just to.
So look at it from two perspectives. So look at several of the small caps that did extremely well between 2009 to 14, which was a bear market. So go back and see what was the market cap of a Page Industries or an Eicher Motors or a Bajaj Finance, and they ended up becoming a mid cap and a large cap and a mega cap. Some of them. But for every Page or Eicher or Bajaj Finance, there were several others which did not do well. And I think the trick lies there. Your ability to pick stocks on a bottom-up basis, identifying the right kind of management, looking at the right kind of business, and looking at a good margin of safety. And particularly the important aspect that I mentioned from an institutional investor's perspective, because the liquidity is poor, I mean, the margin of safety has to be much, much greater. In fact, when, I mean, the Vasan and the team looks at the small cap stocks, they are always look at from buy and hold. I mean, that we won't be able to get out the stock. So if you're buying something, be confident that we are getting married with the company. So then again, your thought process is very different than the thought process which you apply when you're buying a large cap.
So 5-7 year perspective is what you
Minimum, I
should
think
have.
that has to be there.
Minimum.
See, you may turn out to be lucky. In fact, in some
Correct.
of our small cap picks, we turn out to be so lucky. I mean, in 2 or 3 years in that cycle, 2014 to 17, the stocks which were supposed to deliver 15-20% per annum delivered 200 or 300% in 2 years time, and we could book that profit. But that was like, a lot of it was part of kind of luck. But I mean, at the time of buying, you should assume that you are going to hold it for a very, very long time.
What about but what about existing investors? Many of them, there are two categories. One who will have liquidity issues, but the others may generally be averse to the volatility risk. So when this scenario is now playing out, what would be your advice to someone who's already invested in small cap funds? Maybe he came in during the 2018 period, when just before 2018 when everything was gung ho, or maybe he came in after that thinking, oh no, there's an opportunity. So what would be your advice if you look at a small cap
So
investor?
I mean, again, the same point that I'm repeating. I strongly believe India is a paradise for stock pickers. Because you have large number of stocks across various businesses and sectors. I think if you are a good stock picker and apply the bottom-up stock picking philosophy with the right kind of investing framework, there are always good opportunity. At the same time, I mean, if you commit some error of commissions, of course, I mean, the track record may get impacted. As long as you don't make too many errors of commission, errors of omission are okay. It's better to ignore some of the stocks if you are not too confident, but ensure that you don't make too many errors of commission. And I think you can do well. Interestingly, in India, there are lots of businesses where the largest company in that sector is a small cap company. And those sectors have just started growing because we are at $2,000 per capita in terms of our GDP and have a long way to go.
Gaurav, when you look at people, sorry, I've taken over the job of asking questions because it just comes more naturally to me. It's the brief. So when now you're talking to investors, people who have some kind of insight into the sector, are you now seeing people who are looking at entering with their eyes open that this is going to be slightly long haul and you may get lucky with, like he said, with the Bajaj Finance, but you will also end up with a few hiccups. So are you suggesting a small cap fund play as compared to, cherry picking stocks, because they always run the risk of being too caught up in a certain stock? Is that the sense you're getting?
Yeah, see, I think what happens is, especially small cap space, because of some of the things that you've spoken about, right? There's a massive survivorship bias, which is what Navneet was saying. For every Bajaj Finance, you have 20 other companies that went nowhere that no one knows of, right? So I think with a lot of retail investing, which is kind of the investors that be on our platform, some of them are very sophisticated, but a vast majority, their North Star still remains past returns. And that creates a problem. And that creates a really big problem for something like a small cap index. Like if you look at small cap index versus the large cap index going back even 20 years, right? You'll be surprised to find that there is actually no alpha. The small cap index in India, the index, not the managed funds, right? The small cap index in India, it has higher highs, but then it always comes back to roughly the same level at where the Sensex or the Nifty 50 is trading. And it's a very easy chart to plot, and you can check this for yourself as well, right? So what this means is that the basket in itself is not going to deliver. And you have to spend time and energy and say that I'm going to put in the effort to identify which 20 or 30 small caps are going to deliver. Because if you're going to bet everything on 2 small caps, then you're taking too much of a risk. You might succeed, you might make money, you might be on the front page of some newspaper, but that's what Navneet called luck. That was not exactly, a very good investing bet to take. So the second point then comes that if we look at our investor base, and they're all employed. They're not full-time investors or traders. They don't have the time to put into stock research. So our view has always been that, look, India is a overserved market when it comes to fund managers, right? We have 40 plus fund houses. Navneet can talk a little bit more about the competitive dynamics. All of them, or at least the top 25 of them, very well funded, good research teams, great people, great portfolio managers, all competing for the same price and kind of also competing with each other, right? Which kind of makes and then for an individual investor to come in and say, hey, you know what? There is this obscure part of the market where data is hard to find, where there could be a lot of corporate governance wrongdoing going on, where there can be a lot of gray areas, but somehow in that kind of dark corner of the market, I can come in and outperform portfolio managers whose full-time job is to just look at that area, right? So we find it very hard. That's what our view has been. We've always said that whether it be a small cap index or whether it be a small cap fund, if you want to invest in small caps, pick a fund. Don't try and kind of evaluate these companies. But people not always follow your advice. Some people believe in technical analysis, so there are all these patterns, breakouts, momentums, reversion to mean, blah blah blah. Does it all reliably make money in the long run? We haven't seen any evidence of that, neither in the global markets or in the Indian market, where people have reliably made money by doing that. So I think funds are probably the better way to go. Our view on small cap space per se is we are still at the border. We're still not committed a small cap allocation to our ideal portfolio. Again, some of the issues that you pointed out, which are they play along those lines. But we do think that a lot of the kind of excesses of 2018, as Navneet had pointed out, have been taken out of the market. Navneet, you were going to say something.
I was saying that over the last couple of years, we've been in an environment of low growth and low corporate profitability. At an aggregate level, corporate profits as a percentage of GDP are at a multi-year low. In fact, the lowest point in last 10 or 12 years. And within the profit pool, it has got polarized in favor of some of the larger firms. As and when the growth becomes more broad-based, you will start seeing that, a larger number of stocks start doing well, which was the expectation before the health crisis hit us. Of course, the picture has undergone a bit of a change. But my sense is that when you look at the world today, the kind of disruptions we are witnessing, be it geopolitics, be it policy, be it in supply chain and logistics, be it technological disruptions, look at disruptions in consumer behavior. And I think this crisis will only accentuate some of these trends. Within that, what is more important for a business to do well is the nimbleness and agility. It's not the size of your physical assets, because the businesses that can adapt to a newer environment and don't have to worry too much about the existing legacy, those managements will end up performing better than several of the large ones. Now, you talked about some of the previous cycles. 2007, look at some of the companies in the Nifty, and they've gone bankrupt. They are in NCLT. Yeah. Bankers didn't recover the money, and these were the largest 50 companies in India. And you go back in every cycle, you will see the traces of that. Be it the 2000 cycle or the 92 bull market, you will see something very, very similar, where you have some of these large trends. But again, in hundreds of those stocks, identifying those 10 or 20 managements, it's one thing to build a company and take it the size to the 1,000 crore. It requires a different kind of skill set and capabilities to take it to 10,000 and then 100,000. And scaling up with profitability by taking care of all stakeholders, so on and so forth, is not that easy. So if you can identify that management which has the integrity and the insight and the energy and right kind of skill set and investing rightly in this environment, there could be very interesting opportunities going ahead. And that's why we have opened up, but again, only for 1,000 crores, because we know that a lot of money will come at the peak of the market, and that's something we have avoided in past, and we want to avoid that.
As an institutional entity, you spoke about channel checks of companies, but when you look at investing in a small cap or a mid cap, how often do you leverage on the insights from the large corporate fund managers? Because many of these small and medium sized companies are servicing these large companies. So within the organization, how important is a channel check? Because I find good fund managers always do good channel checks within and without. So,
and good journalists like you also help in that case, the kind of stories you get. So I think it's all about, this called that mosaic theory. I mean, you just try to connect the various dots. So it's not only about meeting the management or the promoter of the company. I mean, you meet lots of employees across the hierarchy. You meet the competitors, you meet the channel partners, I mean, the suppliers, customers. You meet the, let's say, as you mentioned about the larger companies. So whosoever they are, they might be as a customer or as a supplier. And then you try to connect the dots of all of this. Accounting quality, I mean, that's like always one of the challenge in India. And you have to go really deeper. And some of these companies, because they will have lesser amount of operating history or maybe a substantially faster growth, but then as I said, the skill set that can take you to 1,000 crore versus going to a 10,000 crores are very, very different. And I think meeting that management again and again and trying to get that perspective from various other sources is very, very critical. And again, I repeat the same thing even at the cost of repeating. I think it's okay to miss some of the multi-baggers, but I think the error of commission has to be avoided. The exit is very, very tough if you get it wrong. I think if you ride it for years, I think it's better with the right set of management. And I always write this: management is the biggest moat in India. It's very different than what Warren Buffett and Charlie Munger and so many other people teach you, or let's say you won't get in Porter's 5 forces. But I think look for the management quality.
That's very good insights, of course. But how do you think the smaller companies in India are currently positioned to tackle the COVID crisis? I mean, just temporarily, right? Because the next 3 to 6 months are going to be really tight in terms of liquidity, in terms of businesses coming in. There's probably no growth. They're probably not selling anything. So they might have great long-term prospects, but if you don't survive to fight, then what's the point? So how do you think they're positioned right now vis-a-vis the larger companies who might have more cash balances to ride through this storm?
So when we talk about the smaller companies, I mean, one thing we have to see is the resilience. So smaller doesn't mean that a company will have a lot of leverage or will not have a cash balance or will not have a fortified balance sheet. I think given the crisis in which we are in, I think the resilience of the business is very, very critical. The other critical aspects are, I mean, look at the risk management. I mean, the ability to, have the scenario planning, because you don't know, there is so much of uncertainty, but then creating the feedback loops, because there could be several known unknowns as well as unknown unknowns. Resources, how are they looking at reskilling their employees in a new world of work from home? When we talk about the risk management, the cyber security, which is going to be another challenge. How is company going to invest in R&D and innovation, which is going to really differentiate you to take advantage of all the disruptions that I talked about earlier? So I think if you have all of these things, just I'm thinking there are a couple of R's here: resilience, resources, risk management, the R&D and innovation, and relationships. This is a
we
time
have the 5 hours of Navneet.
I'm just thinking, it's a coincidence. So, the relationship, how are you dealing with your suppliers, customers, bankers, investors, employees, all of them at this point in time? Building the trust at this point in time will go a long way in how you take advantage of the opportunities on the other side of this crisis. And I think that's the true test of the management. And I have a strong belief. We were talking about 91, 92. Go and see the largest of the companies in 92. And Infosys had a tough time in getting the IPO done. It had to be taken by the underwriters. It was a small cap or maybe a micro cap company. The rest is history. And you go back in every cycle and you will see those signs.
Uday Kotak sir was talking, and he said that bank lines are not, you can't take them for granted at this point of time. If you're a smaller company, you have to go back and look at, you have to go back and look at these companies and actually figure out if the bank or the NBFC that they have relationships with will give them that money today in this change scenario of COVID. So there is a need to go back and look at their liquidity from a completely new perspective. The best thing these kind of companies can do is to go and raise risk equity capital. Show that there is resilience, show that promoters are ready to put in fresh money, not by pledging again and investing, but bringing in their own money. You take a lot of comfort in investing in smaller companies if you know the promoters are ready to put in their money. and if it's not leveraged money in that sense. I think it's an extremely important time for these companies. If they can raise equity at this time, I'm sure the equity markets will be kind to them too.
So a lot of the promoters, I think, always have a fascination with building the empire. It's about like, how do I become larger and larger? What we like to see is the people who are focused on right kind of capital allocation. I mean, your return on equity or return on capital has to be higher than the cost of capital. Correct. How do you convert your profits into the cash flows? I think some of those characteristics are very, very important. So focusing on creating value for all stakeholders rather than just, have that fascination towards building the size. I think that's very, very critical to see in a management. Just taking the point from you. I mean, today, I think, how do you prepare for the survival? I mean, even if you have to raise capital at these depressed valuations, but if you think that there could be larger opportunities and also to survive, this is critical, the management should take that view.
Yeah. At this point of time, if you look at most, even good companies, banks, large banks going to raise money, come on, these are lower than what your valuations were last year, 6 months ago, 8 months ago. But if you can see that these banks realize that they are picking up risk, equity, capital, because it matters, it has to give comfort, you just go ahead and do it. Your investors will understand. I think, although we should be talking from an investor perspective, we've been talking more from a balance sheet perspective, because in this segment, it is extremely important to look at the balance sheet. A lot of companies are able to show extremely low cost of capital or cost of, it's because they're raising CPs. But the minute the CP market dries up in a scenario like this, and you have to go to a bank and you have to borrow at 20% or 18%, everything is gone for whack. So this is why balance sheet reading for these kind of companies is so critical, because the market has dried. The market will dry up for you. So
absolutely.
So an investor is better placed trusting their money with mutual fund managers who know these companies, have the ability to do channel checks, rather than trying to cherry pick. You may get lucky, as we have discussed luck 2-3 times. You may get lucky, but luck runs both ways, right?
But you have to be.
Bijoy, I think Gaurav was touching upon earlier, that a lot of these one-off events are recurring in nature in India. So every year you have the COVID crisis, you had something else, and then you had a demon, and then you had a taper tantrum, and then you had like Euro crisis and global financial crisis. Something or the other is happening every 2 years. And
you have a natural disaster if nothing else happens.
You have to be always prepared for the next crisis. The survival instinct is very, very critical. Very critical.
Which is where also luck comes into play, right? I mean, investing is not something where you need to be lucky once.
Yeah.
You have a 30-year investing horizon, right? So over 3 months you make money, it means nothing. Over 5 years you make money, it's better than making money over 3 months, but it still means nothing. And I think that's what a lot of, younger investors probably don't grasp as quickly.
Absolutely,
What matters is the consistency of those returns year after year after year. So instead of thinking of it as a high stakes, high excitement game, what you have to think of it as a boring long-term compounding game. And that's where the wealth is going to get made, because at the end of the day, you're not going to be a classic example, right? That we always kind of contextualize everything around is that drawdowns are bad, not because people lose money. I mean, they're bad because people lose money, but mostly drawdowns are bad because people stop investing.
Yeah.
If you're 24 years old, you had a great year. Next year, you had a 40% drawdown. You probably lost 40,000 on a 1 lakh portfolio. It hurts when you're 25, and it's a lot of money for you. But what hurts you really badly is that from 25 to 50, then you were never an investor again. And that psychological play, that scarring is something that you have to avoid, which is where kind of fund managers, diversification, a lot of the things that we talk about in personal finance, it literally boils down to stay in the game, right? And small caps is probably the hardest one to stay in the game for all the reasons that we've already discussed. Now before we close, what are your guys' views right now, Bijoy and Navneet, right? Do you think it's a great time to start looking at small cap? Do you individually invest in small caps? And how are you going to? And if the answer is a plain simple no, that's fine too.
No, I think when the crisis hit in the month of March and stocks were down, like, that even at the index level, 30 or 40%, we thought that over the next few months, given the uncertainty which would be there, we will be able to pick up a couple of good stocks. So the fund was only open for SIP, but for a small amount, maybe 1,000 odd crores, we opened up the fund. Of course, we were not expecting the kind of rally that has come, particularly over the last few weeks. But I think the another way to put it is that there's no good time to invest in small cap. From a fund manager's perspective, all you have to do is identify those 5, 10, 20 good companies on whom you can bet for a longer period. When you have these dislocations in the market, it makes it easier for you because the retail interest is very low, institutional interest is very low, foreign investors were selling, flows have come down. At the peak of the market, if you remember that the end 17, early 18 that Bijoy touched about, see the amount of money which was flowing into the small cap funds, the number of small cap PMSs that were getting launched, the number of small cap AIs that were getting launched. And globally also, all the foreign investors were asking for the small cap ideas to every broker and the retail interest. Those are the times when, and as just to quote, the Howard Marks, that in financial markets, things go from flawless to hopeless. So in end 17, early 18, you think things are flawless. And then in March, you think things are hopeless. Reality is always somewhere in between. So how to take advantage of that is important. And you made it such a great point, Gaurav, that I think the big challenge comes in not from that one small drawdown, but then you take that as the only lesson and take it a very, very wrongly that I will not invest again, and then come back in the next bull market, at the peak of the next bull market. I think that's a mistake investors should avoid.
That's what we see in India, and also, at least some of the data that I've seen in India and China, right? Number of folios peak around 2008.
Yeah.
2009, 2010, lots of zero balance folios.
Yeah.
And a lot of those investors come back 2013, 2014. Some of probably have not even come back yet.
Yeah.
Again, we are seeing folios peaking. So there is a risk that a lot of these new investors have never invested before, who are coming into the market, might misread their early success as being equivalent to the ease of investing itself.
But thanks to the good efforts made by people like you, and now there's so much of effort on investor education, on investor awareness, we are seeing a far more, I would say, a maturity among the investors, continuing with this, the SIPs across cycles, don't get swayed by the volatility. I think we are seeing a different trend than what we have seen in some of the other booms and busts.
And I'm into that. And Bijoy, what do you think? Small caps?
I already mentioned earlier, you should pick good, if you're going to play small caps, I would suggest you pick good fund managers. You pick fund managers who have a good track record.
Do you personally invest in small caps?
No, so my view on investing is driven by the fact that, so I have mutual fund allocations and I have some small cap allocation, to be fair. But because you're a journalist, you don't invest directly in stocks. So I am driven by, I'm driven more by the code of conduct of my profession, that I don't I don't do this directly, rather than the fact that I think that's a great stock to invest my money in. But just exactly the point that you made, a lot of people who have seen the trough after Jan 2018 would have exited the market. I think it would be people who are going to look at this market right now also. Many of these companies have a long-term horizon, and you should be ready to stay invested for the medium to long term, whatever your view on that is. So at least 5-7 years is what I've been saying from the beginning. At least that kind of horizon, if you don't have, you shouldn't be entering any market at all. There are lots of these companies that will piggyback on something like an Atmanirbhar Bharat, or the fact that there is the dislocation from China to India. There will be companies that will be well placed to take up these opportunities because they're the only producers of something in India. They're the only replacement opportunity. So you should trust your fund managers to find those stocks and to be able to do it. So small cap funds, yes, I think there is an opportunity there. How you allocate and how much of your portfolio you allocate, well, it comes down to your risk perspective and your liquidity. So.
Perfect. Thanks, Bijoy, and thanks, Navneet. Very enlightening. So just to wrap it up really quickly, investing is hard. Small cap investing is slightly harder. Have a long-term time horizon. Expect volatility. Manage it well. Make sure that you always have enough liquidity, that you're not forced to unwind any position because of liquidity issues. So the big tenets of investing stays. It's just that in small caps, some of the research required, some of the groundwork required, or some of the hard work required to unearth individual stocks, the bar might be much higher than compared to mid cap or large cap stocks. So it's a great, great, Vijay. Wonderful having you guys there. Thanks so much.
Thank you. Thank you for having me.
Pleasure.
Thanks.
Bye.